Hey guys, and welcome to the Working Money Channel. So I've got Bitcoin up here on the chart. I've got it on the daily, and Bitcoin right now sitting where it was basically yesterday. We really haven't seen too much movement, since we saw Bitcoin price just kind of plummet on September the 13th. We did see a high of almost $23,000 for Bitcoin here. Let me put it on the hourly just to show you guys. So up here, we were trading at about 22,780. And then we got the US inflation numbers. All markets just kind of collapsed, and now we're finding support down and around here. So still hovering above that $20,000 mark, and not really too much action here, just trading sideways basically. We're seeing the same for cryptocurrencies like XRP. That fall on the 13th. We saw a rebound to the upside yesterday, late afternoon, I guess we could call it. And then XRP just kind of was bouncing, rebounded back up again, and now we are back down trading at about 33.5 cents. So again, some more of that sideways movement for the crypto space. I guess one of the key factors here is that, it isn't moving any further down. And I guess we could say the same for, stock indices like the S&P 500. On the news, we did see the S&P also fall, and now just kind of hovering down and around here. I guess we will have to wait and see what happens next. And guys, this afternoon, I'm going to do a video where I outline some interesting points, some interesting facts that have come up. And when you piece them together, it looks as though something big is brewing, something that perhaps the powers that be are controlling behind the scenes. So get your tinfoil hats ready for this afternoon. But for now, guys, going to talk a little bit about the Ripple SEC case. So James K. Filan here, bringing up this new development. Since I posted the summary judgment briefing and sealing schedule, which is at the end of this thread, I'm reading statements and hearing from people regarding what we will see on Monday, September the 19th. So in the XRP community, I'm sure a lot of us are very interested what we're going to hear on Monday. But James K. Filan saying, don't get your hopes up too soon, because it might not actually be what you think it will be. James K. Filan explaining down here, he says it's important to understand what you will and what you won't see on Monday, September the 19th, and it is laid out in the parties' joint scheduling proposal that was approved by District Judge Torres. The proposal is very specific regarding what will be made public and when. He goes on to say on September the 19th, we will see only redacted versions of the briefs. So redacted versions of the briefs only. We will not see the actual declarations, exhibits, or Rule 56.1 statements. Those will be released after a decision on the omnibus briefing regarding sealing described at the end of the approved proposal. The briefs will be long, and we will see references and citations to those declarations, exhibits, and Rule 56.1. Statements in the briefs, but we won't see the actual documents until after a decision on the omnibus briefing regarding sealing. It is possible that a ruling on the pending Dober sealing motions, which overlap the summary judgment sealing issues, could affect this schedule, but as of now, this is the projected timing. So he's just outlining that for us, not to get our hopes up, but also giving us the schedule down here as per a previous tweet. He's just reiterating the schedule. So it's all down here, guys. I will link this in the description of the video if you're interested in looking at this in more detail. Also, just letting us know that the 19th, although we will be getting some information, it will be, most likely it will be redacted versions of the briefs only, is what we will be seeing. So, got to keep trudging ahead. Jeremy Hogan here bringing this up with regards to the Chamber of Digital Commerce and their amicus brief. He was actually quite surprised. He says, it's very helpful for Ripple. I wasn't expecting this, to be honest. Part 1 was confusing, but argument 2 and 3 are really good, and the Chamber's disinterest in Ripple brings a lot of credibility to the brief. Now, take a look at 1, 2, and 3 here. So he says, number 1, not so interesting. Legal precedent provides that the Howey test should be applied to determine if the initial offering of a digital asset is an investment contract. Okay, fine. Number 2, though, it is well settled that the subject of an investment contract is not itself a security. So definitely would play into the Ripple story here. Number 3, the law is unsettled as to the secondary transactions of digital assets. So these 2 points, as per Jeremy Hogan here, could be very interesting and will be very impactful with regards to the Ripple case. The Chamber is very precise in the asset itself is not a security argument, but look at the bonus here, he says, pointing out that the SEC guidance says the asset itself is not a security, but SEC enforcement stated the exact opposite. Maybe John Deaton knows what he's doing after all, and then just brings up a document here highlighting that. Again, guys, I link everything in the description, so if you want to see this in more detail, you can check the description of the video. And finally, he says the chamber discusses how there is no authority to suggest that secondary sales can be considered part of an investment contract. It's an important point for Ripple as pertains to potential damages if early sales are deemed an investment contract, so this is a good start. Some in the XRP community down here wondering what this means. Some people thanking Jeremy Hogan like John Wick _589 down here. Peel Outdoors saying, so what does this all mean? You weren't expecting it? Does that mean the case is now leapfrogged ahead? And Dardanis down here saying, no, just that more credible sources say the same things that we keep saying and that we have been saying this entire time. So this is good overall. And of course, we had no doubt Ripple's lawyers were going to hit it out of the park. But just going into, the Chamber of Digital Commerce's amicus brief, it is going to be helpful for Ripple, likely, especially these 2 points here. So I wanted to thank Jeremy Hogan just for pointing that out. Some other big news, guys, of course, is the Ethereum Merge. Now, not going to spend too much time on this, but I'm going to highlight this because I am going to talk and touch a little bit about this in this afternoon's video, this courtesy of Michael Branch. So, of course, this is the big news in the crypto space today. Over 700,000 tweets trending with Ethereum Merge. So Ethereum has now switched officially to proof of stake after successfully completing the merge. It's a big moment in the ecosystem. Ethereum has migrated to a proof of stake network after the blockchain reached this amount on this time. Ethereum co-founder Vitalik Buterin tweeted that the merge was a big moment for the Ethereum ecosystem, praising everyone who helped make it happen. So there's just a tweet to that effect. Some of the details here. Gnosis co-founder Martin Koppelman revealed that blocks have shown amazing stability after the merge, as only one was missed. Buterin also corroborated this view, saying the percentage of full blocks has dropped to 10%. So again, all tweets just supporting that. The merge has been one of the highly anticipated developments in the crypto space over the last 2 years, with the community facing different challenges. According to Ethereum Foundation, the merge could be likened to replacing the engine of a spaceship mid-flight. And guys, just wanted to highlight this point of interest here. The migration could cut Ethereum's power consumption by up to 99%. So this, I think, was the biggest driving factor, this whole idea of climate change and, this idea that some blockchains are consuming too much power, namely proof of work blockchains. And he says the merge will reduce worldwide electricity consumption by 0.2%. Wow, that's a huge amount. I mean, if Ethereum power consumption has gone down by 99% and this is affecting worldwide power consumption by 0.2%, that just says that it was using up a lot of electricity, and that this merge was necessary if Vitalik Buterin and the Ethereum blockchain are to have a future in a new emerging world of Web3 and Internet of Value and all those fine things. Anyway, wanted to just bring that up. Guys, we got some Ripple partner news too with Wrath of Kahneman here bringing this to our attention. SBI Holdings, as we know, is a Ripple partner, and they've been chosen as one of the operators of the cashless payment system and digital community currency service to be used at the end of 2025. Now, I've got the article up here. And so let's just translate that to English real quickly. So as I mentioned, a cashless payment system and digital community currency service, and this is to be used by 2025 at Japan's World Expo. The cashless system, or cashless payment system rather, and digital community currency service operator, SBI Group, naming all the corporations here. So MUFJ Bank also is part of this. The group will contribute to a smooth operation of the Osaka Kansei Expo by building digitalized financial transaction services, by utilizing the technology owned by each of the group's operating companies and investee venture companies. So that sounds to me like they're going to be using RippleNet specifically, considering they are saying that they are going to be using the technology owned by some of these companies. We know SBI is one of Ripple's largest partners, and also some of the group's operating companies. So these guys are obviously partnered with MUFJ Bank, which is also part of that Japanese consortium of banks that has committed to running on RippleNet. And SMBC Group is also another one of those banks. So interesting news there coming out of Japan. Wanted to thank the Wrath of Kahneman just for posting that. I got another one here, guys, from the Wrath of Kahneman. This has to do with Ripple user Wirebarley, coincidentally coming out of the same part of the world, this time from Korea. And just to translate that real quick. So Wirebarley is a Ripple partner, and they have just won an award here. They were part of the G20 Digital Innovation Network, and that's an international event held as part of the G20 Digital Economy ministerial meeting that was held on the 1st. It started as the G20 Innovation League in Italy last year and was held for the second time this year 50 startups, or rather 52 startups and 42 venture capital firms across 14 countries participated. And Ripple-enabled Wire Barley, guys, this is Korea's leading fintech startup. They participated in this event and presented its continuous innovation and the social role of cross-border finance. Wire Barley was awarded the jury prize in the financial inclusivity category, where experts directly select innovative companies in each field. So guys, they won the jury prize here. Ripple-enabled Wire Barley at this event. This is the first time that a Korean startup has won the award at the G20 Innovation event. Wire Barley was awarded in the financial inclusion category, and one domestic company was awarded in the renewable energy category. So Wire Barley has a mission to make financial services easy and convenient, so that no one is excluded from the benefits of finance. Again, one of the talking points that Ripple has always been commenting on, that they have been proud about since the beginning. So this quote was from Yu Jung-won, CEO at Wire Barley. He said, based on fintech technology and international financial network, we will be reborn as a company. So great news there. Coming out of the Wire Barley camp, wanted to thank the Wrath of Kahneman again just for posting that. Here's another one, guys, coming from the Cryptic Poet, and this has to do with Ripple partner Novati Group. And if we just take a look at the title up here, Novati Group adopts Theta Ray AI technology to monitor global payments. So let's scroll down here. Theta Ray, a leading provider of AI-powered transaction monitoring technology, today announced that Novati Group, a leading fintech that enables businesses to pay and be paid, has chosen Sonar, Theta Ray or Theta Ray's SaaS AML transaction monitoring solution to protect its growing global payment services against money laundering and other financial crimes. Headquartered in Australia, Novati Group enables businesses and individuals to make payments both domestically and internationally. Novati currently serves 59 countries with products including cross-border transfers, digital wallets and vouchers, and overseas bill payments. Novati is Theta Ray's first SaaS customer in the Asia-Pacific region. And so they are enabling this AI-powered technology. Sonar, Theta Ray's advanced AI-powered transaction monitoring solution based on artificial intelligence intuition, will monitor hundreds of thousands of transactions per year for Novati. The solution's ability to detect the earliest signs of sophisticated money laundering activity will enable Novati to verify that processed transactions are isolated from illegal activity without affecting the quality of the service. So they are using a more sophisticated technology now to make sure that they can track and identify money laundering, which again is, if we are going to be moving to a more digital system, money laundering is going to still exist. So they're going to need to find a way to be able to track this. And it's looking like this Ripple-enabled company specifically partnering with Theta Ray to do just that. This ability to provide a trustworthy, secure service will empower Novati to increase its international growth opportunities. So that's the other thing. If Novati sees how much they can grow in just Australia specifically, they're already reaping the benefits of RippleNet technology. They're obviously seeing, look, the opportunities are vast and wide. Why not expand to other regions of the world? And so in order to kind of, stack up their back end, have a plan in order to grow, these guys need to be responsible and obviously, tackle the issue of money laundering, because if you're going to be an international player, well, you gotta play by the rules. Adopting RippleNet, the first step there, and now they are looking to tackle money laundering issues via this AI technology. Sounds kind of interesting, actually. Wanted to thank the Cryptic Poet for posting that. Here's another one, guys, from Nathan Price here on Twitter. Now, some information that might suggest that although the XRP ledger does in fact include retail investors, I don't know. I mean, it is still up for debate. Does Ripple really like retail? And so this is the thesis of Nathan Price's tweet here. And he brings up some interesting points. One document here from the University of Durham, or rather Durham University, Local Exchange Trading Systems, okay? That's short formed to LETS, L-E-T-S. They equal the need for XRP to be cheap to activate trust lines and to pay transaction fees. But we've also got traders. So he goes through this and he discusses these organizations that have a vested interest in the XRP ledger and XRP specifically, but their needs are going to be different, and the price of XRP, according to their needs, are going to be different. So here's what he says. So the LET system, they need XRP to be cheap to activate trust lines and to pay transaction fees. But traders, on the other hand, want its price to be volatile to make higher margins through arbitrage. Also, payment providers want XRP's value to be stable. So does Ripple really like retail? All very interesting questions here. Again, this is from Durham University, a document that was published a couple of years ago now. And so an interesting hypothesis, he just goes through the notes here, Ripple's gateway versions. They also talked to, there was a personal email exchange here with Ryan Fugger of Ripple back in May of 2018. So just the kind of the legend here to kind of give you guys a sense of what is included in this document. So we highlight some important points here. The terms of trade made between money cultures and between active forms got influenced by two elements, XRP's price and Ripple's pivot towards financial institutions. Let's not forget the XRP is for everybody, and you got to start off small, start off with retail, selling XRP on the open market, but eventually, Ripple's been around for about a decade now. Eventually, they had to pivot, and so they started pivoting towards financial institutions. Let's supporters need XRP to be cheap to activate trust lines and to pay transaction fees. But traders want its price to be volatile to make higher margins through arbitrage. So this is all stuff that I read in that tweet. Payment providers want XRP's value to be stable to mitigate the exchange rate risks associated with using it as a bridge asset. And Ripple's management is sitting there going, okay, how do we do everything for everybody? Their management had to reconcile these three tensions with the need for making a market for XRP. To reassure the market, Ripple froze 55 billion XRP in an account that automatically released only 1 billion XRP a month. So they're saying they use the escrow as that mitigating mechanism. Over time, the terms of trade favored crypto traders over Let's communities, and these users drifted towards other projects such as Stellar, which uses very similar source code, but has lower reserve requirements, and the Trustline network implemented on Ethereum. Second, Ripple influenced the disposition of the ledger when the company pivoted towards cross-border payments in 2015. This pivot was due to both regulatory pressure and new market opportunities. By 2015, the only point of access to the XRP ledger at the moment was through Ripple's web client. Ripple, however, did not want to control the XRP ledger or manage the ledger's users as customers. Because the ledger is officially open source and permissionless, the company's mantra was, we don't own the network, we don't have customers. Let's go down here. Ripple settled the lawsuit in May of 2015. Now, this is not the SEC lawsuit, of course. This is another lawsuit where FinCEN actually deemed XRP a currency as a sidebar. By committing to an extensive KYC program and by paying a sum of about $700,000 shortly after Ripple applied to attain a New York State BIT license for institutional sales of the crypto asset XRP. Ripple then pivoted towards financial institutions and partially outsourced regulatory compliance, serving banks rather than individuals meant for Ripple to be able to rely on banks' compliance departments rather than on its own forces. So here we're seeing the pivot, okay, from retail to the institutions to the banks. And, when I came into this, Ripple was already kind of partnering with banks. And, the central bank thing was a big thing. People were already getting really excited about XRP being that institutional cryptocurrency that is going to move all the money. But back to this point here, okay, this thesis. The first money culture underpins Ripple Pay's mutual credit network, inspired by heterodox economists such as Buckminster, Fuller, Bernard Later, and Michael Linton. This culture foreground trust, distributional fairness, and mutualism. The second culture, though, emphasizes the liquidity of XRP as a means of payment and as a speculative crypto asset, and it is a variation of digital metalism. Define digital metalism as a culture in which trust in the code substitutes for the credibility of persons, institutions, and governments. So looking towards the code rather than, the middleman, the institutions, the bureaucracy, the people that get involved. Hence, they meddle in other people's business. However, as Schwartz has it, every payment for someone is an act of arbitrage for someone else. Liquidity is conducted to value in terms of exchangeability of assets with cash. Hence, in order to work as a bridge asset, XRP requires a market and liquidity of its own. And guys, this is why we've seen Ripple release their on-demand liquidity product. This is why they have other products like liquidity pools. And there are some other ones too. Oh, right, the line of credit, available liquidity on loan for people who want to pay it back with interest. Adoption and market making constitutes a chicken and egg problem for crypto assets. People will not use an asset unless the market is developed around it, but as such, markets will not develop if people do not use the asset. Over time, Ripple tried different strategies to expand XRP's liquidity and ecosystem. So again, this report was from 2018. So this was, of course, before the on-demand liquidity product, and it was around the time that Xcurrent was running, and they were about to test XRapid. I believe XRapid was officially released at the end of 2018. And so Ripple, again, tried different strategies to expand XRP's liquidity and ecosystem. And so, fast forward 4 years, here we are today. XRP was first distributed either freely or as remuneration for developers who spotted errors in the code. So they're trying to get XRP out. They're trying to make it useful. They're trying to get it liquid. And at this point, I think we are very close to being there. And then, guys, let's not forget what Dilip Rao said at this conference. As this transitions away from retail to institutions, we'll start to use it for wholesale financial usage. That's when the turning point will come. So wholesale financial usage. Obviously, there is going to be big money involved. And so does Ripple favor banks and financial institutions and enterprise-grade solutions over retail? I mean, it's looking as though that is the case. Nevertheless, we do have to remember everybody is going to be involved. And guys, this is good for you and I because we are retail and we hold XRP. Let's not forget a tweet that Digital Perspectives tweeted out to Dilip Rao back in 2018. Liquidity is an ocean with fish large and small. So he says, I got two real quick questions. Does transition away from retail to institutions mean that we will see retail market phased out, Dilip Rao? And if so, will XRP holders be able to continue to hold XRP without restriction? Thank you in advance. Now remember, this is again from 2018. And things could have changed. Dilip Rao no longer works at Ripple, but I don't think that matters. Liquidity is an ocean with fish large and small. Many varieties needed for an ecosystem to thrive and grow. Yes? So what he essentially means here is that yes, retail is definitely going to be using XRP as market makers, but financial grade institutions as well are going to need XRP, and they're all going to need the liquidity, transaction large or small. So aren't you glad you hold one of the best cryptocurrency assets on planet Earth? I know I'm happy, but tell me down in the comments what you guys think. Please subscribe to the channel if you have not already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.